All right, we're live on the recording. We're live on social media. Let me go ahead and pop my camera on there. And it's a little bit dark in here, so I wonder if I'll have to set up another light. Just kind of figuring out where the lighting stuff goes. Let me get my my face smaller, and then let's get my screen share started for you guys in the Discord. All right, can you guys see my Weeble? You should see a screen on there with the Weebles. Well, we got good audience this morning. All right, cool. So lifers, you already kind of know what happened here. I was just typing that in the chat here. I missed this entry down here, but the entry on this one would have been right. Yeah, using that strategy that I teach you guys. So it's okay. But you know, that was a beautiful setup and I love it. And let's do more of that. So, all right. For today, I just want to kind of walk you guys through. Most of you guys probably weren't in the premium stream or able to watch the recording. So this is a small cash account. I was trying to reset it back down to 100, but I had a little issue doing that. So it's currently at 194.56 after yesterday's profits. So we're just going to do one day at a time here. And the goal is to just show you guys every single day or every single trading day. Shut up, alarm clock. You know, how I trade this small cash account. And we're just going to let it grow. I figure I'd start with a small amount just because it is achievable for most people. And it's relatively easy to manage risk on smaller amounts because there's fewer emotions and things like that. So if anybody wants to follow along, I encourage using your eyeballs before your fingers. You know, don't blindly copy trade me or anybody else because it just doesn't work. And, you know, just use your best judgment, do your own research, and we're here to help you focus on what actually matters, which isn't technical analysis, because a lot of people believe that, you know, being able to chart and stuff is the key. It's the thing that's going to unlock your financial future and all that good stuff. It's really not. It doesn't matter. At the end of the day, you guys have demonstrated this over and over again. You guys can give me a random ticker, a random price point, and I can still trade it for a net profit. All right. And with that said, I kind of want to just show you guys this on the recording and on social medias. This is the profit matrix, the P&L matrix for a 1 to 3 risk reward ratio. And only, you know what, I did this yesterday too. I got to get my camera smaller on the broadcast here. So basically this is the potential outcomes, right? If I take 10 trades with a 1 to 3 risk reward ratio, if all 10 are losses, I'll be down less than 10% overall. If all 10 are wins, I'll be up about 40% overall. And then my end result should be anywhere in between there, as long as I don't deviate too far to the downside. Now, yesterday I kind of doubled that 3% target, so I went a little bit high, and that's okay. You know, it's all part of the process, and that's the goal, right? As long as I don't go the other way with that, which, you know, I control, you know, to a degree, right? Because the market can always just do weird stuff sometimes. And that's my job, right? My job is to identify a low risk, high potential opportunity. Don't take high risk opportunities, guys. Low risk, high opportunity, potential opportunity. God, I can't talk today. It's one of those mornings. I got to drink more Monster. And, you know, my job is to find, you know, step up to the batter box, get my hit. And then as soon as I make contact with that ball, I need to get out. So I need to find a way to get straight to that base, get out, eliminate my risk exposure in the healthiest way possible. That's my job. It's not to try to swing for the fences every single time or just stand there, you know, swinging the bat like a lunatic or to charge the mound and try to hit the pitcher. You know, it's not part of the game, and I won't be playing very long if I try something like that. So instead, let's take a reasonable approach and focus on what I can actually control, and that is my risk exposure and not the direction of the market. So to do that, I need to make sure I have 3 criteria in any strategy, right? The first one, I need to make sure the price is going the direction I need it to go to make a profit, right? And I'm primarily going to be doing scalping on this account and on these streams, but this applies to swing trades, it applies to long-term investments, it applies to all kinds of stuff. I just need the price to be going the direction I want it to go. Okay, I don't really have to care what the company's doing if I'm just scalping. I'm just trading the volume, I'm getting in and out. Obviously, it's backwards if you're investing because you've really got to base it on the free cash flow and all that good stuff. But my job is to just get in and out when the price is going the direction I want it to go. So if the price is going like that, I need to get in somewhere around here, and I need to get out somewhere below here, right? So ideally, maybe down here, okay? Anything from here to here is just extra emotion I don't need to carry around, right? And I see people do that all the time. They beat themselves up every day because of missed opportunity or the one that got away or the one that ran after they got out, blah, 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 blah. it's all part of being human, and I explain it on a neuropsych level in Lifetime. But just understand that that is something that is inherent to the human species, and you're going to have to just deal with it. Like it's okay to just let things happen without you, right? It's all part of the ego, and it's your expectations. Your brain is wired to survive by doing certain things and viewing things certain ways outside the market, and it just doesn't work well in the market. Hey, what's going on, Fire? And the dude, Floki. Good morning, everybody in the Discord. Hopefully you guys are not creeped out, and hopefully you're having a good morning. So this is running a little bit before market open. I'm not going to trade anything before the open here, just because we'll get into that, right? When this account's like maybe 500 or higher, then I'll get into that stuff. But this is exactly the kind of thing I'll be trading, and this is a perfect example of what I'm talking about. This is the stuff I want to get in. So in this case, we'd get in like somewhere around here. Stop loss would be right there. Some sort of disproportionate take profit, and I would just be out here, and then all this stuff up here, I don't need to carry. I don't need to care about, right? So that's where people mess themselves up, is they put themselves in this box, and they can't get out of it. But on the flip side, if we look at something that's sold off just as hard, for overnight, right? You missed this move yesterday, right? That's all missed opportunity as well. Do you beat yourself up, or do you praise yourself for that? Absolutely not. Most of you probably weren't even looking at that. But for some reason, and I talk about the reasons in Lifetime, and I'm going to be giving a pretty intense lecture in Chicago. It's going to be interactive. We'll have role playing, and I'll put the link here in the chat for anybody that wants it. About exactly why we do this stuff. And I'll put that here as well. I'll put that there. So you guys are all welcome to take a peek at that if you want to. There's no pressure. I'm leaving Friday. I'm heading out Friday to get out there, and it's going to be a blast. I'm going to love it. Everyone's going to be happy. But back to what I was rambling about. You can't beat yourself up for missing something that went a little bit higher after you got out, because anyone that participates above where you exited has higher risk than you, right? So if your risk exposure is back to zero, and that's your goal as a professional manager of risk, you've had a successful trade. That's good enough. You have to find a way to move on. If your goal is to get out here and the price is up here and you're freaking out over that, you've got emotional obstacles, and that's your psychology that's going to work against you, because eventually this is going to turn into this. And then you're going to be down here compromising and beating yourself up, So let's be a little more rational and not necessarily just give in to what our brain tells us we should do, because it doesn't know things. We have our prefrontal cortex for a reason. It can override things. It can rationalize things. And I'm not saying you have to fight your psyche on this, but you have to find a way to reframe things and redefine your measure of success in the market. It's completely upside down to everything our brain knows outside the market. So we got about 3 minutes here before the market open. Do any of you guys in the chats have questions before we get started? I've got $194.56 in this portfolio for today. I'm going to place two 50% buys. I'm going to shoot for a 6% target, and I'm going to use a hotkey to get there during the market. So I'm just going to hold control and hit 9. It's going to place a market order and a target, a take profit order, and that's it. And then it's just going to work out. If I have to adjust it and move if I have to put a stop loss in place, I can. But ideally, I'm just catching things as they're pushing and getting out as they're pushing. I'm just going to look for anything on the top runners list for right now. I'll get into whole screening, the screener stuff and all that in over the next couple of weeks. I'm going to be doing this every day except for Wednesdays. So right now I just have the Webull top gainers list open. You guys give me a ticker if you want. I'll trade it if it's reasonable. I want to demonstrate that none of this stuff actually matters to the degree where people think it does. SPY. I will be trading SPY and SPX contracts. APLD, you want me to scalp that pre-market? I think it's bleeding out there, buddy. I actually like this one for swings. Right out of that level there. It's a nice area. Look at all that. It's a nice one. Beck will move to Puerto Rico. You didn't take us with you? Whatever. Kenny Petty, that was APLD that I pulled up very briefly. I'm just going to use the top gainers list here on Webull. It's something that everyone can access in real time. That's the only reason I'm doing that. That looks like the top one of the biggest mover list. Yeah, that's NIBF. So I'm going to move around throughout this list here. Like this one is setting up lifers. You guys know exactly what I'm looking at right here. We've got our stuff, right? Very easy to do, but I have another minute before the market opens, and I don't want to just jump into stuff as the market's about to open because there's going to be a lot of turmoil. And that first, bam, all the brokers are opening up, market orders are executing, all that good stuff. I don't want to get caught in that stuff. So if I see something pushing and I'm confident that it will keep pushing based on what I see, in the price action, then maybe I'll jump in just for a quick scout. But that's my goal. My goal for today is to work as little as possible. Okay, I want to trade less. So I'm going to hold control. And if you look right here, you can see a control 9 there. And that is just me buying 50% at the last price and automatically setting a 6% take profit. That's mostly what I do. I just do 2 of those every day. If I win the first one, I'm done for the day because I'm up 3% for the day and I can walk away because 3% compounds insanely well over the 252 trading sessions in a year. Okay. So that's just my personal approach. You guys are all more than welcome to use your own. But you guys in lifetime, you already know what's up. So we'll get it. We'll get it one way or another. And when I'm done trading, that doesn't mean I'm done for the day. I'll keep looking at stuff for you guys. Like we looked at Palantir yesterday. We had 2 successful option setups. So I got to change this pre-market to the 1 day. And then this will tell me kind of, what's moving for the day. All right. JWAG. Me too, buddy. All right, so this setup I do like. It's Lyra. It's from yesterday. Let me erase all these drawings. We traded the hell out of this yesterday. Let me just pull that up, actually. I'll just zip over here real fast. Again, just consistent profits. Boop, boop, done, done, done. All right, moving on. Let me erase, oops. Let me erase this button here. All right, so it might be getting some juice here again today. It's 3.24% on this candle, but it doesn't quite have the volume that I like. So let's kick it back over here to this guy. This one obviously is kind of the crowd favorite for the day, but I want to see it break over, something. I want it to do something. So I'm very tempted to get in here, but because I like the order book setup. I like the volume. I just can't quite trust it yet. So we'll keep an eye on it, right? You don't have to just jump into stuff just because it's in front of you and because it's moving. We want to, this is automatically a better setup. So I'll go ahead and jump into that one if I can get filled. And if I can't get filled, I'll just cancel it. I might not get filled. And that happens. It's just something that, there we go. So I got filled on MCTR. And I just have my control 9 set of take profit, so I don't have to think about anything. And I really hope this one doesn't get halted again at the same price. I think it just did. That is hilarious. 2 days in a row. So this exact same thing happened on Lyra. Sorry, guys. Apparently I have mesothelioma kicking in again. So on Lyra, right, we got in yesterday, right after market open, I think it was, or right when there was a move. Let me just pull this back up here. That was hilarious that it's happened again. I want to say it was this one. We got in, and then this candle happened, and it froze like right at my sell order. It was literally at the price. It's on the recording. I put the recording in the past live streams, and I also put it in the free chat and all over social medias. That was just hilarious that it happened again today. So what I'm going to do here is I'm actually going to, I'll leave it. I'll just leave that there. We'll just grab our other trade here. So this one, I'm going to hang out for just a second. And this is NIVF. There we go. Okay, so I'm just going to hop in here. It's a high risk entry, but I've got the same exact thing set up where I just have a take profit. And this one might show some more volatility. We've had a little pull down here and all that, but that's the pullback we want so that we can continue to the upside. So we'll go ahead and see if that happens. So now I have my 2 trades for the day, effectively. Yeah, well, it should be 5 minutes. 5 minutes in theory, right? Now this one I'm a little, I'm going to let this one breathe, this NIVF one, because it's got a lot more volatility for the day. And if it works against me, that's okay. I'm not too worried about it. I made 6% yesterday, so today I can afford some wiggle room if I got to take a slightly bigger loss. But this one has a lot of juice to it. It's got a good setup on the order book here, and this time and sales is flying. That's what I really care about. This is NIVF. It's New Gen IVF Group. I don't know exactly what that means, and I assume it's not IVF as in in vitro fertilization. I can't talk today, guys. Jeez, in vitro fertilization. I can ramble off neuroscience terms all day, but I can't talk about IVF apparently. So it's weird. All right, so what I'm going to do is I'm just going to put these top and bottom if I need to. So that is NIVF, and then this one here is MCTR, and this one's going to be halted for a while, so I can't really do anything like that. Tammy says, Pooks, do you just do manual stop losses on these kind of plays? Yeah, most of the time, if I have to, or I'll put a stop loss in, you know, if it's it depends, right? Because we talked about the bracket stuff. So I have control 7 set up, or I'm sorry, not control 7. Control 5 is one that automatically sets a stop loss and take profit bracket. And I also have control 7 here for just a trailing 1% stop loss. So if something's really pushing and I don't have a fixed target, I'll do the control 7, and then that'll just follow the price up. Oh, it does IVF? Okay, that makes sense then. And yeah, I don't really, that's the cool part, is I don't need to look at anything other than the price action, the volume, because if you think about it, all that stuff's already baked in. And we talked about that with the 13th century Zen philosopher, Dogen, right? Every single factor in the universe is baked into every action effectively. So price is going to go up if it's going to go up. It's going to go down if it goes down. It doesn't really matter if I know things, right? My job isn't to try to control that outcome, and it's not to try to impose my will. My job is simply to get in and out, and that's the only Boolean that I have to concern myself with, and that makes decision-making very simple. I either like it, and I'm in for a reason that I can objectively articulate, or I don't like it for a reason I can objectively articulate, and I just get out, right? That's all I need. All right, so for NIVF, it's still just kind of, it's puttering around here, but these candles are forming lower high, or higher lows, geez. So me, it's okay, but I'm expecting some selling, right? Because people are going to want to take their profits. But the fact that this hasn't blitzed to the downside below $4 yet is a pretty good sign so far. So we'll just wait and see what that does. And then for this one here, MCTR, this one should be unhalting here pretty soon. I don't remember exactly what second market was. 931.59. Okay, so it looks like these fills came in at the last minute. So we got about 50 seconds left on this one. And then, of course, right, we have our trading plan for the day, or my trading plan for the day. I'll walk you guys through that here in a second. That dictates that if I win the first trade, I don't really need to enter a second trade. But I entered 2 trades right off the bat because I was confident in both of them. And you can see here I've got $52 in settled cash, and that's okay if I don't use it, right? Because I'm already up 3% for the day. I can walk away. That's good enough. That's all part of my plan. I am set. All right. So if that's not quote unquote good enough, then I need to ask myself what my goals are and how I can expect to achieve them if I sacrifice good enough, good enough, good enough. So there we go. So NIVF looks like it hit target. I can walk away. So whatever it does above, what was that? I think it was like right here, right? Whatever it does above that level is just extra, right? So if I'm fixating on this stuff up here in this purple box, I am destroying myself. What I'm doing by doing that is I'm like, if we view the market in terms of a job, right? This is me going to work. Okay. Oh, it looks like that. Okay. MCTR unhalted. Let's go ahead and pull that up over here. You know, this is my quote unquote job, right? I show up to work. It's my side hustle. I spend maybe a couple minutes looking for something. I push 2 buttons and I let the market do its thing. So MCTR just hit its target and I'm done for the day, right? Those are my 2 trades. I walk away. I don't have to think. But what happens is when you look at stuff after you're out, you're basically just going to your job and hanging out and you're working for free because you're not getting paid. So, but you are committing emotional currency and you're wasting a lot of your you know, time on this planet looking at something that doesn't have any material impact on you. So, you know, you got to be mindful of that stuff, and that's where people hurt themselves. I actually like this one after a pullback, like this one. So I expect this one to probably form really low at this point. This is NIVF again. But that expectation doesn't matter at the end of the day. Like I don't control that. I'm just, this is what I would look for. All right. And then, you know, again, I'm done. Like I trade to trade less, so I don't have to do a whole bunch of crazy stuff and make myself, you know, emotionally slaving to the market. So, this one still has a lot of juice on it, MCTR, but we'll just go ahead and watch. You know, so the next step, right? The next step after these, you know, the first like 10 minutes or so, you really got to be careful. You don't want to just chase everything. You don't want to take too many trades. You know, I took a big risk by taking them both at the same time. And that put extra burden, it put an extra stress on my brain just as a human, but I can handle it. You know, I've been doing this for a decade and a half, but a new trader would, you know, probably flip back and forth between, you know, two different charts and just going crazy and trying to push all these buttons. Actually, let me just check something real quick. Sorry, guys. Okay. Sorry, I just had to make sure that we were, if some movers showing up because we just, we're getting stuff out of storage. You know, so that's my job, right? I don't need to keep myself in a stressful state. And the whole point of this is to bring the stress down to as low as possible so that I can make objective, clear decisions and follow my plan. So if I'm taking big losses, I can't do that because big losses are stressful because I don't like them. My brain doesn't handle those very well, and nobody's really does, because it meets it meets the basically we have an expectation in our brain when we focus on something and when we commit, you know, resources to it specifically. And then when that's not met, our ACC and insula freak out because there's uncertainty and all that stuff. And, you know, like I teach in Lifetime, panic signals go everywhere. And then each part of the brain has its own unique role in sabotaging us. So we have to control that by changing the narrative that gets fed into those, right? Because we can't control what happens when it's already in the amygdala and we're angry, right? Because that it's blind. It doesn't know what's happening on the screen. It doesn't know what our fingers are doing. It just relies on what it's told by well, it kind of knows what our fingers are doing, but on a simplified level, it just kind of relies on what it's told by the ACC, the anterior cingulate cortex, which is the part that compares things and detects uncertainty, and then it freaks out. So in order to change all that, we need to change the conversation those two parts of the brain are having, and we do that through reframing and other techniques, like right here, for example. The lifers know exactly what I would look for here. In the next, 10 seconds, and I'll go ahead and watch this one as well. I'll just do a hotkey on this one. This is TRAW, and I've got, this is an unnecessary trade, so I don't have to take this if I don't want to, but I have $52.84. So let me just change this. I'll just do $50. And for this one, I'm going to use my control 5 because I want that tight bracket. Okay. MCTR halted to the downside. Yeah, that makes sense. So, there's a lot of volume, a lot of directional movement in the market those first couple minutes, and that's why we get the hell out. Isn't it, JWAG? Sorry, let me catch up with the chat. Hueyes, is that how I pronounce that? Hueyes? No, right? Just Hueyes? Or is it a double L, like a Huelis? I need help. You got to help me. I don't know. Is it Spanish? Okay. Whew. All right. Footprints. Okay. That makes sense. Okay. Yeah, that makes a lot of sense. Good stuff. All right. I got you. I'm picking up what you're putting down. I'm coming to this live stream faithfully from now on. You simplified it so well, matter-of-factly and fearlessly. I made 70 cents, just 2 shares within a minute. Not bad. I've been flattering her for a while, and you make it so easy. Well, I'm glad you're here, man. That's assuming you're a man. Sorry. But either way, I'm glad you're here. And the 90% of this is just not hurting yourself. So we got to figure out why we're hurting ourselves and how we're hurting ourselves, and then put specific rules in place to prevent that. And then we spend the majority of our time and effort focusing on why we can't follow those rules. That's the trading journey. It's not mastering the shapes and colors that are on your screen or staring at charts for 4 or 5 hours a day. That's not healthy. It's not productive. What we should do is look inward for 10 minutes a day, every day, even if it's on the weekend. Just focus on, why am I thinking what I'm thinking? Why am I feeling what I'm feeling? And, why am I reacting in a certain way, or what's driving me to do this, stuff like that. So actually, you know what? For this one, I'm just going to get in when it's time. This is TRAW, and I'm waiting for a break above that line. I'm not going to jump in early. But as soon as we break over that line, and I can do a buy stop order and all that if I wanted to, but I think I just kind of like it. Actually, let's zoom in super far so it looks dramatic. I need some cinematic music in the mix. I smell what you're stepping in. There it is, Breckle. There we go. So I'm just going to get in. And then what I'm going to do now is I'm going to just zoom out a little bit, and I'm going to draw a line here. And then I'm going to draw a, actually, I'll use a position tool for that. So I'm going to go up here, click long position. I'm going to click that. I'm going to drag this down here. And then I'm going to drag this one up just a little bit to match that. And then I'm going to shoot for a 1-to-3 risk reward ratio. Do I know what's going to happen? Absolutely not. No idea. Do I have to? Absolutely not. Is this a high potential, low risk opportunity? Absolutely. So what I can do now is I can put some brackets in place. So I close by stop loss, take profit. And then I got my levels all plotted out. So the stop loss is going to be 216 and the target's going to be 243. And I'm just going to sell all my shares and then that's it. I don't have to worry about it. So I've got 22 shares, 9.16% profit potential. That's 20 cents, almost 20.5 cents per share. Now this pullback here, this reversion, it should be at least 25% of the length of this impulse, but I can't guarantee that, right? That's just it's a statistic. Okay, so it should hit this level. And if it hits that level, it should hit this level because it should come up to here, but I don't know that. It hits this level about 90% of the time. It hits this one about 60% of the time based on what I know. Right? I don't control anything. And this could just as easily just fall off the face of the earth, right? Which is where this comes in, this stop loss. This is about 3%, and it's about a quarter of the account that I'm trading this on. So I shouldn't be devastated if this goes against me. And in fact, I'll still be above my 3% as long as it doesn't sell off super hard and get into a halt. And then I get stuck in like some weird situation where it ends up selling down at like $1, right? Yeah. So does anyone have any questions so far? I'm going to be doing this every day, all day, every day, except for Wednesday and then the weekends, because I'm not going to be doing crypto and stuff on this account stuff. All day, every day. I wish I could trade all day. I would love to just be on here all day with you guys. That would, my little heart would explode, and probably from the monster. It's probably going to explode either way, guys. But did anybody think it's a coincidence that we're having two easy trading days back to back? You know, this one just happens to be on the free side, right? But I also shared the recording from yesterday with the free members so you guys can watch. I didn't do anything differently today. In fact, I haven't done anything differently for a couple of years as far as the scalping stuff goes. I just happen to be on a smaller cash account as opposed to when I'm off camera, you know. But you know, this, I'm just going to trade every single trade I take on this account. I'm going to do it on a live stream, so it's recorded, and you guys can all watch in real time, because I know that is a completely different value than just posting something in a chat and then following up on it later. You know, it's not fun. Sorry, let me just catch up on the chat. I really wish I could just keep my chat over here. And actually, you know what? I think I might move that over here for you guys. The only problem with that is it's going to move the broker over. So I'll experiment a little bit. We'll figure that out. All right. So it looks like we stopped out here, which is okay, right? It's a 3% loss on 25% of the account. I'm not devastated. You know, my trading day is not, it's not the point where I'm going to quit trading and walk away, you know, because we took a small controlled loss and we had two disproportionately larger profits, right? 6% profit, 6% profit. That gives me an average of 6% on the cash that I used, but I also had a quarter of the account or so where it wasn't used. So it was settled cash. So that 6% was brought down to about 4.5%, right? Because 75% of 6% is 4.5%. That's how we got to that number, right? So it's just a math game. And then on 25% of the account, we took a 3% loss. Sorry, 25%, we took a 3% loss roughly. So now we're down to 3.5%. So I automatically made sure that I was going to be above my 3% goal for the day. So if I come back over here and I look at the week so far, I can tell myself, right? I can say, hey, day 1 and day 2 this week, start to finish strategy, just following the rules, plus 3% minimum, plus 3% minimum. I have 3 days remaining. I don't know if I'll be able to. Yeah, I'll be trading on Friday. Actually, never mind. Next week, I won't be able to trade because I'll be in Chicago. Let me put that link in the chat as well, just to make sure everybody has it. There's no pressure, but I want to make sure I keep putting it in front of everybody. I'll put it on the social medias as well. And then everybody is free to check that out. But if you're coming, you got to come fast, because we're going to be I'm leaving Friday. So yeah, so if I line this up, okay, with this guy, right? If I well, I gotta move it over here because the camera stuff on the recording. Sorry about that, guys. You know, I'm as far as this 10 trade series goes, right? I've taken wins, and when I say trading series, I mean the number of days trading session. So like one of the 10 would be yesterday, another one of the 10. So number 2 would be today, right? So I've taken 2 trading sessions so far. They were both profits. So I am no longer able, unless I deviate horribly, to achieve a negative 9.5% result for the 2-week period, or a negative 5.9% end result for the 2-week period. So because I've got the 2 wins, right, I'm pretty much guaranteed to get something on this side of things, right? Does everybody understand that? So if I just took the next 10 trading sessions, well, the next 8 at this point, that's my end result. That's the array of potential outcomes as long as I follow my rules. So does that give anybody confidence in, you know, if you just take 3% profits over 10 times, you get almost a 40% return, just a 3% ROI for the day. Like, I think that's good enough, because that's equivalent to about 20 bank accounts worth of interest on that same amount of money. If you spread it, if you clone that money 20 times and put them into bank accounts, savings accounts, and got a 2% annual yield, that's a year's worth of interest on 20 savings accounts in 10 days, 10 trading days. And this number compounds stupidly high, as long as you don't deviate and do something crazy and hurt yourself and then end up back down here, right? So that's the goal, is just stop hurting yourself. And we can do that by just understanding that losses happen, and rather than trying to avoid them and run away from them and pretend they don't exist, you know, instead just embrace them and accept that they are part of the process, and you having trouble following your rules is part of the process, and that, you know, it doesn't need to be, you know, home run after home run after home run. These little guys add up just as effectively, but the losses stay small and controlled. As long as you can master that, you'll be fine in most cases. I can't legally say that, but it's very hard to mess this up if you just do stuff that makes sense, right? So let me just catch up on the chat really quick. Sorry. Actually, no, I'm just going to pull it over here so you guys can all see it. Okay, let's take a look here. Thank you, Mule. I'm glad you're here, man. I look forward to hanging out with you one day. How often are the free lives? So every Tuesday and Thursday, market open, I'll be trading the market open live trade like this. So in 2 days, I'll have another one. Monday and Friday, I do it in premium. And then Monday afternoon, I have a lifetime stream, so they get a little extra. And then on Friday, I have the Rags to Riches stream at 11:30 Eastern, which is, it's not really live trading, but it's more so, you know, psychology, portfolio management, and just strategy stuff. So it's not quite, hey, watch me do this and push buttons. It's more like, what's going on with you guys, what's getting in your way, and how can we work around it. And I do a lot more of that in lifetime. We got quite the little cult built up in there, and I love those guys so much. But it's when you're ready, right? You know, everybody here has a spot waiting for them in lifetime. It's my goal to get you there, and I feel much more comfortable getting you there if I can give you the foundation that allows you to make enough to pay for it, because it's a big commitment. There's payment plans, so you know, it's not too much more than you normally pay for premium, but I understand it's a big commitment, and you got to kind of be here if you want that to be worth it. So Charlie says, that's where my knowledge level is finally going to open. Levy. Oh, my bad. Minus 7 days. Absolutely, Charlie. We're going to be in that room 4 days. You're on are you VIP? Are you on the gold? You got all 4 days, or did you go to silver and get the 3 days? I can't remember. Nikki knows. She knows everybody. I rely way too heavily on Nikki to tell me what's up. But either way, we're going to be in the room for 3 or 4 days. We're going to do a lot of over the shoulder stuff. I'm going to walk you guys through a lot of pretty cool stuff. It's going to blow last year's out of the water. I hope that's my plan. And we're going to do some role playing and all that good stuff. It's going to be fun. Baru, Pookie, stupid question. I'm sorry. What software uses Control 9? Yeah, this is Weeble. So if I pull up my Weeble, you go down here into the settings, and then you go to hotkeys, and then you click trade. Actually, we had a lifetime stream about this specifically yesterday. Then you go to hotkeys, and then you can just go in here. So like my Control 9, for example, is this one. It's the buy, sell at 6%. I just made it. It's a custom hotkey setup that you can make. I just use a single other than an OCO because I'm not doing those. Limit order, 50% quantity for my strategy, my approach. At the last price, you can make that limit, ask, or bid. You can always fill in the ask as well if you just want to get in. But I just like the last price. It's more reasonable. No limit offset. That's for another component that we don't really have to worry about. If I miss it, I miss it. It's okay. I'd rather just let a trade go. Good till canceled. I almost always use that. There's no real advantage to using a day one unless you have like, I don't know. There's really no, I mean, it's very niche where you'd want to use that. You can't turn extended hours on for your hotkeys, to my knowledge. And then I just have a take profit order of 6%. So you can change this to dollars, price range or ticks, I'm sorry, or percentage. So I just leave it at 6%. And that's it. And then when I come over here and I hold control, you can see all my hotkeys that I have set up. And then that's just Control 9, which is right here. Okay. So I don't have any more settled cash. So let's look at some other stuff for the day. So we've got Tesla. Obviously, you guys like Tesla, and looks like we're still just chopping. We got a little wedge forming. Not much we can do about that. Let me just bring this over here. Hopefully, you guys can. Yeah, I got to find a way to get some better real estate on the screen. I'm just gonna have to move it over there. Sorry, guys. So what we could do, right? We could do the same thing we did yesterday. We've got a big range. Okay. The step one here for this strategy is plotting out the 15-minute range, the opening range. So we just take the first 15-minute candle, which we can take after 9:45 Eastern, and then we plot it. And then I want to look for a 5-minute close above or below, right? Pretty basic strategy. It's been around for, I don't know, 2,000 years or so. Super simple. We're waiting for the conversation to distill down into something directional. So let's do the same thing for Palantir because we like that one. I'll just get rid of those. So these both had really wide ranges, and they both have really wide contention ranges. So there's a smaller body and much larger wicks on both sides of these. So it's going to be risky biscuits for the day. Now Uber, that Senor Duck likes, that we can plot a range and we can make it like that. And then we just look for a 5-minute candle close above or below. Okay. So in this case, I'm personally bullish on Tesla, just what I've seen already this morning, but we'll have to wait for that candle to close on the 5-minute above that range. These ranges are pretty big. We can take the same approach with SPX if we wanted to. All right, so I'm just going to look at the 15-minute candle, and we're going to look at the 9:45 candle. Obviously, please do not trade this if you're not experienced at risk management. I'm just showing you guys a demonstration. So please internalize that. If you're interested in trading, you don't have to, but I would recommend at least picking a contract and watching it, right? So you don't have to trade these. I'm just putting this stuff in front of you so you guys can see the concept, because SPX I know moves. So what we can do is we got the 15-minute candle. We got the range, right? 15-minute range. Now we can look for a 5-minute close above or below. And then we look on the 1-minute for a retest and a low risk zone that we can use for a retest specifically. Okay, so I've got this pulled up over here so that when I look for a call, right, I'm personally anticipating a call, but I have to be open to not having a bias, right? So I would love to see a bullish move, but because that's what I'm seeing based on the price action, right? But if it goes down, if it goes to the downside, that's okay too, right? I can't let my bias, my expectations influence my decision making here. So we're just going to look at the 5-minute. We're going to listen to the chart because it's going to tell me what's going on. Actually, you know what? Let me break that down because I think that's a good way to think about it, right? So let me just bring this back to the one grid. So when the market opens, okay, we got this 15-minute candle. You got the bulls and the bears. They're just shouting at each other. You know, they're both trying to win. They're both trying to take over. You know, they're getting a divorce and they want, like, one of them is going to stay in the house, right? So you kind of let them fight, all right? And then we come down to the 5-minute and we look to see who's going to be in charge after that conversation is kind of calming down, right? And that's where we look for the candle close. And then what we do is we give both chances aside to respond, right? And then we take, when someone, kind of mutters something, essentially that's what we're doing. We're just waiting for the opposition to mutter with a low risk opportunity. And then after they're done muttering and the other guy's like, what was that? That's when we enter, because that's when things are about to kick off in that direction, because they have to prove a point effectively. Now that's kind of that's an analogy, or that's a narrative. That's not actually what this represents, but it's fun enough to think about it that way, because it sets a story. So yeah, let's look at NVIDIA. So 15-minute again. I'll just do the same exact strategy. I kind of like this setup. I think it's just a little bit ahead of the others, right? So we got our 15-minute, we got our 5-minute. So this is the candle that we look for. Now we're not getting a pullback. Yes, Fergie, the 15-minute open candle range definitely includes the wicks, because I want to capture that full range. So now what I'd like to see is a pullback and then a low risk opportunity right here, or somewhere around here, maybe a little bit bigger. And then a continuation for a higher high. That's what I would like to see. Now, again, my goal doesn't necessarily have to be to get the entire range or to push up above a new high and all that, because it doesn't matter at the end of the day. My goal would be to capture something like that, just from here to here. And then again, anything above there is extra. I don't need to worry about it. I can always learn to scale out and all that good stuff if I want to, if I'm a new trader, but that shouldn't be the make or break as for my trading, right? And the reason we don't want to jump into calls right now is A, it's elevated risk. B, the IV is going to be off the charts on those contracts. So let's just wait. We'll wait till we get a retest. And then if that conversation happens down here with low risk, then we can look at a call opportunity and see if it makes sense. Does that make sense? I hope so. What we don't want to do is just jump into a call right here. So let me pull up the, I'm going to add this to the watch list, and we'll just do that. We'll add, we'll have all three of these on the same watch list, and Tesla is still in the range. Palantir is still in the range. Uber's still in the range. NVIDIA is the only one that's broken out. So this is why I think so many people are jumping into this right now. It's extended. So it's high risk right now. There's going to be a lot of counter trend scalpers that are going to try to grab puts as soon as this little 5-candle series breaks. So let's look at that side as well, because we know that we're looking for a push to the downside. So let's find a clean mechanical way to do that. So we've got, a bunch of candles here with higher lows. So let's go ahead and we'll plot it, right? And what we're looking for here is for, we're just going to follow these candle lows up. This is, again, a super simple strategy. Most of you guys still aren't going to be able to execute it. And that's all where the education and coaching comes in. I could teach you strategies all day, and I know they work, but being able to execute in real time is always going to be a challenge. So, for this case, we've got, 1, 2, 3, 4, 5, 6, 7, 8 candles so far. This one's still forming. So 7 closed candles in a row. I only care about the most recent 5 at any given time, because if I look at these 5, they'll have a higher low. If I look at these 5, they'll have a higher low. If I look at these 5, they'll have a higher low. That's all I care about. I just need any series of 5 candles with higher lows, and then I can just move my line up to the low. And then when it breaks to the downside, that's when I can look for an entry if the level from there to the higher of these 2 participating candles is small enough that I can absorb it without hurting myself. So at this point, we're just letting it breathe to the upside. The chart is telling us it wants to go up. It's still going up. There's no reason to try to jump into something, just to try to magically snipe the top, because the chances that you're going to be able to do that consistently are insanely low. I know, I've tried it. I've gotten quite a few tops and bottoms myself, and I've sniped the absolute perfect prices, but I understand that those are not something I can do consistently, and it's almost always just on a small starter position. So there's no reason to try to just jump into that and hope for the best, All right, so let's kick over here to Tesla. We got our 5-minute candle here closing in 2 minutes. Okay, so we got to wait for that next 2 minutes here on that one. NVIDIA is stalling a little bit, so let's go ahead and watch that one. We got 3 seconds. I'm just going to move this line up here. There we go. And then we got another candle. So after this candle closes, because it's 1 more minute, then the Tesla 5-minute will also be closed. But it's got to close above the box. It's got to be out of the box. Sad Boy Slim. Yeah, it does. It's way overextended for today right now. Yeah, that's it. We don't have to chase it, right? I took 15% on the 140 break, which is all you wanted. Good stuff, man. So you just got in and got out. That's all you need, right? Is your trading day complete, or do you have more trades that you wanted to do, or plan to do, I should say? because we all want to trade more, right? Plan to. Okay. How many more? 2 more? Okay. That's good stuff. Did you already hit your daily profit goal for the day? Your daily limit? Or not yet? Not yet? Okay. What about your daily loss limit? I'm going to grill you a little bit. All right, so here we go. So this right here would have been the bearish entry. So let me just draw that as well. Okay, so I'm just going to put the lines here, and then there's our 1 to 3 just for funsy onesies, and then I'm gonna move this line over here, and I'll realign the actual price point so it stays. And this is just a reversion scalp. It's nothing groundbreaking, right? So we've got this impulse, and we're just trying to catch that 25% pullback and then a little more. So not the end of the world if we don't get it, but that's a low risk opportunity at 0.13% risk in exchange for 0.38% profit. In terms of options contracts, that gets a little bit higher, right? And I'm not really looking at puts so much today. I'm really looking for a call off this level here. So let me just switch back over here to Tesla as well. So in 3 seconds here, this is going to probably close above this box, at which point we can then start to look for our actual trade. All right, so now I'd like to see, actually right here would probably be close, but I'd really like a retest after that candle closes. So let's go ahead and wait. You're down 2%. Okay. So is that within your risk tolerance, your trading plan? It is? Okay, beautiful. That's all I care about. So to make sure you're taking care of yourself and you're following your rules, and more importantly, studying what happens when you're not able to. All right, so we're kind of testing the zone here, but we'll see what happens in the next 20 seconds or so. I do have the calls pulled up here. I would probably be looking at like the 350s. Now these are expensive, right? So this is why I don't trade these on this account. But I'd probably be looking at the 350s. So let me go ahead and pull that up as well. And that would be the contract I'd be looking at because of the open interest volume and the Greeks and stuff. So I'd personally be looking for an entry after it breaks over 349.12. And obviously it's high risk, so I don't recommend anybody actually jumping in. Just watch it. Watch what happens, right? What do you have to lose by watching? And I'm also just going to peek over here really quick. Okay. So we got about 30 seconds left on this candle. And all we're looking for is just a break out of this box. Now, ideally, we have a super tight risk range. So like this candle's a little big. I like this candle because it's smaller, but this candle's getting a little big. So even if this one breaks over, sometimes it's better just to let it go. I really, really like those super tiny risk ranges because that's my bread and butter. But we'll have to see. So this one here, NVIDIA, it looks like it's just pumping to the downside, which is good. But again, our main setup that we're looking for is going to be a retest off this box. This I'll make it a blue box. All right. So that might happen after, after like 10:30 or so. Like I'm really looking for a trader before 11, right? We don't want to trade these too much or too late in the morning here. Okay, so if I were to enter this one, if it pushed back up, right, we'd have our 5 candle rule and all that, but the risk range on this would be pretty sizable, right? Because we got the entry there, we'd have our stop loss here, which would now be down here, right? So I'd still want to just default to that, and then a 1 to 3 risk reward would be pretty high up there. That'd be around 350, 351. So maybe it's a little risky, but that's why we don't enter yet. Also, right? I just kind of want to let the chart play out and figure out what it wants to do. So this one here would be slamming target. Boom, done. Moving on for the day. Just kidding. We're going to wait for a call opportunity off this box. But that's easy, right? Those are just those little reversion plays. We can get those all day. Did that make sense, actually? Now that we're like, I want everybody to kind of see that it's just shapes and colors. I'm looking at this left chart here. I also just realized you guys probably can't see that on the camera. I wish I could just turn my camera off. Problem is I can't put it down here in the bottom left because it'll cover the strikes and stuff for the options. I can't put it up here in the upper left because it would cover the price action and the watch list. And I can't put it over here anywhere because that covers up the sensitive stuff. So I'll figure something out, guys. But for right now, does this make sense, right? We got our 5 candle rule. super tiny risk range. This is what I love. This is textbook. I absolutely love this stuff. And then we got our 1 to 3 risk reward ratio. We hit our target. After that, I don't care. I don't care what it does between here and there. Realistically, I only care that it comes down here, gives us a nice low risk opportunity back to the upside, and that we can catch a small piece of that as a trade. Does that make sense? Because that's my job. I don't need all this other stuff in the mix. And Tesla looks like it's just right back in the box. So this is not a retest in this case, right? At this point, it's just aggressively selling off, which means we may also see a break to the downside. So what that tells me is that we can't really rely on this 1 minute. We got to come back up to the 5 minute, and we need to see either another candle break and close above, or another candle break above and close below, in order to look for the next 1 minute opportunity if we want to trade these breakouts. And Palantir looks like it's just doing the same thing. It's just kind of puttering around. So it's a choppy day, a little bit choppy morning. We've gotten quite a few good setups, and so far they've all hit target, minus the $50 trade that I took on MCTR, I think it was, whatever that last one was. And that was, we're net positive, so I don't have to worry about any of that stuff. But things are kind of hanging out around their opening price today. And that tells us, because we're using this strategy, because we're forcing ourselves to wait, this is keeping us out of risky biscuits territory. Does that make sense? Like, that's my goal. Again, as a professional manager of risk, I have to accept that sometimes it's better just to not force stuff. And this is why. Do I ever short? I can on this account because it's a cash account, so I can't borrow anything from the broker. But I trade puts all the time. Absolutely. I mean, if we broke down this analysis up here on NVIDIA, right, that would have been perfect. Easy short. Now, the efficiency of the contract, it's a little bit, undesirable on NVIDIA specifically. I just don't like NVIDIA contracts myself, but the same concept applies to SPY and SPX. We just have to be careful with our risk. And you can see even that is just range locked. There's nothing really crazy going on today. So why try to force stuff, right? All the price participation minus these little outliers here, these little wicks, has occurred within a range of $1, just under $1, like 90 cents. It is just flat today. It's choppy flatness. It's a channel, right? So by doing something like this, I keep myself out of that garbage. And I just know that right now is not a good time to try to trade these for today, because my strategy dictates that I wait. It's a built-in filter. Does that make sense? And that is infinitely better than trying to, hope and guess. Now I can trade the inside of this channel all day, but as soon as that breaks, I'm kind of toast, right? So I don't want to be the one that jumps in right when that's about to go against me, I got to keep moving. I got to stop moving stuff over here because the camera. You guys just yell at me if you see the price action on the left side. Okay. I need you guys to hold me accountable. Yeah, Palantir looks like it's at the bottom of the range on this one, but nothing we can do about that, right? We don't control that. All we control is when we get in, and we're going to wait till it makes sense to do that. And then we control when we get out. And as soon as something doesn't make sense, we're out. Or when it makes sense to get out, we're out. All right, so back on NVIDIA. Looks like we're just getting a super shallow pullback, and then it just wants to push higher for right now, and that's okay, right? The trade that made more sense was to the downside, and we got that, and then we would have gotten out, right? That's a theoretical trade. I'm not claiming that I live traded that. Now we don't have a healthy setup here for another bearish move, but I can see the temptation there. A lot of people would want to just break that to the downside. Now, here in a couple seconds, we might have that. So let's go ahead and watch. And then we'll have another potential opportunity here for a short play to the downside. Right. We also have the 84% rule, all that good stuff. So for this one, I'd be waiting for a break below 140.94, and this is on NVIDIA. So let's go ahead and pull up our handy dandy chart tool. Now, again, you guys aren't going to be able to see this on the recording. And that would be the 140.94. So we'll do the the 141 puts on that one. So NVIDIA is going to pop over here under the right chart, so you guys will definitely be able to see that. The chart here we're going to look at. Let me actually turn my camera off really quickly for that, just because I don't like having that cover price action. So I'll get a better overlay and all that stuff for you guys pretty soon. So we got about 3 seconds left on this candle, and then I'm just going to move this level up. And now we just wait. So these contracts are a lot cheaper. They're 170, but again, I don't recommend anybody just blindly copy something because Poopie's drawing it on a screen. I'm walking you guys through what I would see and how I would trade this personally if I had settled cash in an account size that was appropriate. So eventually, yes, we'll be trading options and all that good stuff. But for right now, it's just $200 and it's growing, 3%, 6%, 5%, whatever, 4.5%. But every day it compounds, and that's where we get into the bigger, the account scaling. Yeah, I don't see anything useful on Tesla either. It's just kind of, so it kind of sucks. This is like one of the free live stream days because I hate when the market just kind of ranges like that. But on another level, it does show us, more specifically, it shows you guys that it's perfectly okay to just sit the market out sometimes when it doesn't make sense to be in. It's not healthy to just trade every day because you can. You don't want that cash to burn a hole in your pocket because that's super dangerous. But you guys can also see I've been doing this for a decade and a half. I know it's okay to just sit some days out, or to just grab quick trades and just let the rest go. You don't have to jump in and force everything. So at this point, it looks like it's pushed to the new high, right? So now we can wait for rejection, blah, 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 blah. Unless we were trading the 5 candle rule to the upside on this one, we would have a decent call on this. But again, that IV is pretty high on these. And that risk range is, it's a little bit, it's not yummy, So I probably wouldn't have gotten in a call here, even though we're seeing, some glaring confirmation bias that would have been a good outcome. It wouldn't have been a good opportunity, if that makes sense. I just don't like that size of that risk range, plus the overall, overextension and all that good stuff. So instead, what we can do is we can wait and we can get a better opportunity. JWAG, patience is absolutely so crucial. I've sat watching Ethan streams for a week waiting for an A+ setup to present itself. Then when it does, boom, baby, boom. Absolutely. That's my job. I'm a bear sitting on the side of a stream with my mouth open. I'm waiting for a fish to jump up in my mouth. And then my job is just to close my jaw when it's time. If I'm leaning over the stream trying to chase every fish I see, I'm going to fall in. I'm going to get smashed against the rocks, and I'm not going to be a bear, and I'm not going to have teeth very long. So there I go. I starve. So instead, I can do what makes sense. I can just wait at the right place, which is a waterfall, knowing that salmon have to jump up. I can just stand there with my mouth open. They'll jump in. I can trust that. But I have to focus on where my footing is, and I have to keep my risk management safe so that I can continue to fish and keep getting food and keep myself alive. So this is pretty primed at this point, so I'm just going to draw the tool. This wouldn't be the actual entry until it breaks below. There we go. So that would have been the entry right there. And then a 1 to 3 risk reward. And this is obviously high risk because there's still a lot of bullish pressure on this. So let me draw the long tool here for the contract. So that's going to be down here. And don't really know where that stop loss would be on that one because we're basing it on price action. And that needs to go up there. This needs to go down here. So kind of got a little misaligned there. Yeah, so that's it. So basically the contract profit would be locked when the price action hits this level down here at 140.82. So I'm going to move this horizontal line over, and then I'll realign it with the low of that wick that we used. Okay. That way it's a 1 to 3. Oops. I promise I'm not moving stuff around. I'm not trying to sketch you guys out. But this is it, right? And since it's an options contract, and since it's a 0 day or a short-term expiration, we'd want to use a very low position size, less than 5% of the portfolio. And if you can't afford $170 or $150 or $160 contract with less than 5% of your portfolio, it's probably not a good idea to be trading these, because that's what happens a lot of times. New traders just want to get in on options as early as they can, and they end up using the bulk of their account for this stuff, and then they just take hit after hit after hit. Realistically, this should be a very tiny piece of your portfolio, in my opinion. And I have to say, in my opinion, legally, but I really don't want to see you guys hurt yourselves. You know, it's just not necessary to be profitable. Options amplify things. They represent 100 shares. So if you couldn't afford 100 shares, it's super risky biscuits to be trading options. All right. So in this case, we would have maybe got filled, maybe not. Let me just fine tune that. It's got to be like to the cent. So I doubt we would have got filled on that. But let's go ahead and see if that pops over. And as soon as it pops over, so as soon as it hits 141.51, we'd be out. So you should be over here with your hotkeys ready. Just boop, boop, as soon as it breaks over. Because if you hesitate, you know, and that thing blasts because it's a breakout, you're potentially looking at a harder sell-off. But still not too terrible. But you don't want to get caught in that stuff if you don't have to. All right. So we'll go ahead and see what that does. Obviously, the setup there is pretty primed, and that's a high quality, high potential, low risk setup. And that's all I need. So we'll just wait and see what happens. Yeah, Theta sucks. IV sucks. IV is a bigger culprit in the morning than Theta. Theta's pretty consistent throughout the early day, and then it kind of gradually ramps up towards the end of the day. But before 11, it's okay. It's mostly the IV and just the value of the premiums based on that. Charlie says, I backed out of trying to jump into options too soon, and now I'm on the other side and scared to start. That's okay. You know, if you're scared is an emotion, right? So is greed, you know, and if you're not confident in what you're doing, you probably shouldn't be doing it if it involves risk, you know? And that's what watching and studying and practice is for. You know, you're going to take losses, right? I tell you guys all the time, it's like set out with the intention of taking 10 1% losses in a row, and you might be pleasantly surprised. You know, just try it, just on paper. Don't use any real money if you don't want to. Just practice it on paper and see how often you actually get all 10 losses in a row. And then look at something like this that demonstrates that you only really need 30% or so, or even less. You know, I've demonstrated a 11% win rate, still got net profit, but it takes discipline. You know, you can't let the losses take over, and that's where people hurt themselves. Right, so only two outcomes can happen here in this setup, right? This level can get hit up here, or this level can get hit down here. That's it. I don't care what happens above there, and I don't care what happens below there. Those are all zones of uncertainty. And if I'm focused there, I'm not focused on what I should be focused on, and I'm wasting time. I'm hanging out at my job after hours, working for free because I just love my boss that much. I like going to work and being done with the day when I'm done, right? I show up, I get a paycheck. So if I'm down here worried about it, or if I'm up here compromising, I've already kind of deviated, right? And yes, in time, I will be showing you guys how I scale out of stuff. I'll show you guys in real time, you know, because I'm a big fan of proof of concept. I'm going to show you guys, you know, the reasons behind my position management and all that good stuff, because that's really what breaks it down and makes it a lot more profitable. But that's not what's required to be a successful trader. What's required first is that you manage your risks. Yeah, it's an NVIDIA put. It's the 140 June 6 put. Just using it for demonstration. I can't trade it on this account. It's the account's too small. So I'm mostly, and these targets, like this target range here is not accurate. This is just to draw where the entry was. So what I'll do is I'll just put a line there, and I'll erase this so that people don't think there's a contract-based stop loss or take profit. It's based on price action because we're before 11 a.m. So actually, let me draw that. I already did. Okay. So what I'm going to do is I'm going to draw this over here. And then I'm just going to reline that to the candle. So it's still a 1 to 3. So if anyone's watching the recording here trying to pick it apart and say I'm cherry picking or any of that stuff, which I totally do when I see people trading online, because I'm like, that's you're cherry picking. You know, I'm trying to be as fair and transparent as possible here. So, but I encourage scrutiny, right? I want you guys to pick stuff apart and be like, well, that doesn't make sense. That doesn't add up. because there's a lot of people out there that have been hurt by people on YouTube trading and a lot of Discords out there. So I want to make sure that you guys see start to finish how I do stuff so that you guys can do it for yourselves. And I lose any of that credibility if I start shuffling stuff around or showing you 6-month-old P&Ls and things like that. Mastermind, sorry, Pookie, but real money trading is a whole different ballgame than paper trading. Emotions, FOMO, and others play as much a role on real money trade. Absolutely. But you don't need real risk to figure out the shapes and colors part or the position sizing part. That's all just shapes and colors and math. Now, if you're paper trading, you're probably also going to experience a certain set of emotions. They just will be a little bit less intense. So rather than trying to tackle all the problems at once, as far as mastering the technical analysis, the position sizing, the tools, like your hotkey setup and all that, rather than trying to figure all that out on top of your emotions, which are just going to cloud everything and make it that much harder, break it up into pieces. That's why we paper trade. We paper trade to master the execution part of it. And then we use that to study ourselves and figure out, well, I know I was supposed to push the button, but I was feeling greedy, or I thought it would go higher, or I could see it breaking a new high and I wanted to hold it, or, it went below my stop loss, but it kind of hung out there for a while. So I compromised, right? Those are things you need to be writing down and studying, because those are all just the little parts of your brain having a different conversation. And the market's designed to exploit that conversation. So we have to change it. So it's much easier to study that and to get a clearer version of that conversation without all the real risk and all the real emotions on the line. And the better you can lay that groundwork, the better time you're going to have in the market overall. Does that make sense? Like, you got to kind of put in some work, but it shouldn't be all just trying to figure everything out at once, because it's not going to work. It's going to suck. Man, they really like this one. JWAG. This is the point of practicing over and over and over again. A pro basketball player will practice a shot thousands of times so the game is not on the line. So that when the game is on the line, he's so practiced, so yeah, exactly. You don't want to have to. I'll break it down in terms of neuroscience, right? So your brain has different types of memory and a different set of a different narrative, right? Based on who's talking inside your brain. And we store habits, we store behaviors, we store execution libraries. It's just a predetermined process, like lighting a lighter, for example, right? You have to grip these fingers, flick this down with your thumb with enough pressure, but not too much pressure, because you don't want to push the lighter out of your hand. So your brain stores all this coordination stuff and the order of events, right? Or swinging a baseball bat, or throwing a basketball, or riding a bike, or driving a car. So that you don't have to deliberately focus on that as you're trying to do stuff. Because if you're trying to drive a car and it starts raining and you're looking at the windshield wiper switch and you're, looking at all the little things every single time you got to turn it on, you're going to crash. So your brain kind of stores that as a second nature kind of thing, right? Trading should be exactly the same. It should be, this is what the chart's telling me. I see visual stimulus. I can recall this. My hippocampus can tell me this is what we recognize. And there's another part of the brain specifically for patterns and things like that. And then I have the dopamine cycle started because I'm anticipating an outcome. And that's a whole different level of the neuroscience stuff. But, it all boils down to that conversation. And if I've already had the conversation 100 times and it's been traumatic, I have to recondition the way that I remember those things. I have to use things like objective repetition. I have to find different outlets for the emotional charge. And paper trading is a good way to rewrite that library of traumatic experiences, because most traders have a pretty rough history in terms of trades, right? Otherwise, you wouldn't be here, right? You wouldn't be trying to figure this stuff out. So if all you've had is trauma, that's going to automatically bring all that emotional baggage to the forefront next time you try to execute, because that's what your brain knows. It's the pattern it recognizes. And, you have to rewrite that experience. So you have to dilute it, right? If you got a pizza and you cut it down the middle, that's 2 big slices of pizza. Now, if you cut that same pizza into 100 slices, let's say those 2 pieces had anchovies on it. Now it's 1 out of 50 slices, 2 tiny slices as opposed to 2 huge halves that have anchovies on them. it's going to be a little bit easier to approach that pizza, because you're going to be like, okay, well, most pizza slices aren't bad. They're acceptable. I don't have a strong reaction to these most slices of pizza, but there's two outliers that I remember that were kind of rough, and that's where you can kind of whittle those traumas down, right? So you just have to condition your brain to do something new and different, and it's going to be uncomfortable because most people don't want to paper trade. They don't want to waste the time because they view it as a waste of time, and that's where you hurt yourself. Mastermind, what did I say about NVIDIA swing puts? I don't swing NVIDIA anything personally. I'm just getting in and out. NVIDIA is overvalued by a tremendous amount from a DCF perspective, and their thematics are not that great. The only reason NVIDIA is on top is because their competitors kind of suck. So they have kind of a unique advantage in that they are on top, if that makes sense. But as soon as that floodgate opens and there's alternatives, a lot of their money is going to flow to those alternatives. So I don't personally trust NVIDIA, but I'm also not a fool, right? Because just because it's on top, it has an advantage. So it could just as easily push really hard to the upside. So I personally just don't swing it. Now, I wouldn't be against doing like an iron condor or an inverse iron condor, particularly around earnings, because there's other strategies. It doesn't have to be just up and down. It can be, brackets. It could be ranges, straddle strangle situations. There's all kinds of stuff we can do. But no, I don't personally like NVIDIA that much, if that makes sense. All right. So it looks like we're getting our push down on NVIDIA here short term. Let's see if it can break below and hold below these wicks. This is a little bit of a push there on the contract. Let me just measure that really fast. That's about 6% so far. So we're just waiting. Remember, the potential here is to come all the way down to here. So let me just move these lines over, because that is the setup for the day is going to be a bounce off this range, but that has to happen before 11 a.m. in order for us to view it as safe. So for right now, it looks like if you were a bull, if you just wanted to trade calls, you might just not get your trade today on NVIDIA. But if you wanted to trade puts, you'd have two opportunities. And so far it looks like this one's going to work out. They would have happened to have worked out. And that's, before 11, right? Because we don't want to trade too far into the morning, because then theta kicks over and IV just dies. So we don't want that. So it looks like puts were the ones that would have worked out today. Let me just peek at Tesla here. Same thing, like Tesla just never gave us a setup. Let's look at Palantir. Palantir just never broke out of the range to give us a setup. Uber never broke out of the range. SPY broke out. Let's see where that would have done. So we had our 5-minute candle close above here, and then we'll look on the 1 minute for a retest with a low risk. And then we've got low risk opportunity right here. We've got another one kind of up here, but that's a little high up. I don't really like that. That's not yummy to me. So I'd probably say this guy right here, because it dipped in and then we got a break over it. This guy was a tiny risk, but he didn't have a guy break over him. Instead, he had another red candle with a lower open. So that would have been the entry opportunity right there. All right, let's kick back over to NVIDIA, because the puts are increasing in value. Look at coins. You mean coin, the ticker coin? Adrian, do I ever trade within the range? Yeah, if the range is wide enough and it makes sense, absolutely. You just flip it inside out. So basically, let me just walk you through this, right? It's probably easier. Let me grab a different ticker as well. Let's look at coin really fast. Oops. If I can type coin. All right, so let me just move all this really quick. I'll leave the contract up here for NVIDIA. Hopefully it's not buried behind the camera. Let's say you've got a range right here, okay? What we're looking to do in most cases is a directional breakout, and that involves establishing the range, obviously, then the price breaking out, then a retest, and then a low risk entry opportunity inside the perimeter of that range. Does that make sense? And like that's normally what we look for. That is a zone recovery strategy effectively without the position sizing, right? You're just looking for a breakout of a range, and then our opening range break if you prefer that term. They're two different things, but now all we have to do to trade in the range, if the range is wide enough, let's say the range is up here, then we just trade that range. We look for those low risk opportunities, just inside the range. And we can rinse and repeat those till the range breaks. So what we can do there is we can do something like this. And then, you know, the potential there is for the range to break, and then you're kind of toast if you don't stop out in time. So got to be careful with it, but it's the same stuff. You know, it's just, you know, you're in lifetime, so you know exactly what I'm about to talk about. But you guys can literally trade any price point for a net profit if you have a decent enough strategy in place. Like if you guys like give me a ticker and stuff, I'll walk you through it like I always do. All right, so for coin, here's the opening range, and this one just looks like it never got the pullback, right? So same thing. It's just strongly directional. This would be good maybe for a put setup, but it's high risk, you know? So we got our 5-minute candle right there. We never got a retest on that one. So super risky biscuits on that. You know, I would personally be looking maybe on the 5-minute for maybe a couple days out for a put, but it's risky. I mean, this is a lot of strength, and we can't really guarantee that that's, I don't know, it's really close to 11. You know, it's kind of dangerous up here. So you'd kind of have to go out, in my opinion. And I also want to show you guys something specific about the contract, right? Because I want you guys to internalize something in terms of risk management. This is what we look for when we're looking at risk exposure, okay? I don't want the majority of this time when I'm in something to be spent down here in the red, and I don't want it to go super deep red, okay? I want it to spend most of its time up here in profit-taking territory so I can choose when I get out of it. So if something goes way, way, way down here and I'm still in it, I've already broken my plan of being a professional manager of risk because I didn't manage the risk, okay? So this is how your chart should look if you break down the time spent in loss or drawdown territory and the time spent in profit-taking territory. So if that's upside down, your results are going to be upside down. Okay, and that's kind of what I'm going to get at here with these scalps. Right, I'm going to demonstrate every day. Sad Boy Slim, that was the baseline chart. So in Weeble, you click the line style, and then you click on this one, and then you just you unauto the Y scale, and then you just move it up and down until it matches your line, and that's how you can see the range. So I double click because I like the auto scale of the axis. But it all depends. So let's zoom in super far and watch this hardcore sell off. I'm gonna drink some Monster while we're waiting. We going up or down, boys? Up or down? It doesn't matter, right? So if I ask you guys in the chat right now, all 43 of you, plus all the people on socials, if this is going to go up or down, how many of you would have a confident answer right now? Tammy's typing. Just typing like a madman. Sad Boy somewhat? Okay. So you would have a bias. You'd try to predict, right? X is up confident. Okay. Candy Penny says sideways. All right. That's also an option. Okay. So some of you guys are going to say up. Some of you guys are, well, it looks like a bunch of you guys are saying up. How many of you can base that on something objective that you can articulate? Is it a statistical pattern? Is it an indicator you're using? Is it stars you're looking at? Is it did you spill some ramen on the floor and it spelled out the word bullish? What's your go-to? And how reliable is it? EMA and a pattern? Okay. All right, okay. It appears to be overbought for today, so it should go down. Okay, so Fergie's trying to get it to revert. Stand by some Apple Jacks are mostly green. Okay. So it looks like we got a bullish sentiment. It looks like we're getting rewarded for that, right? For now. Apple Jacks. I got to use that. That's a good trading indicator. We'll call it the AJ Prime or something. Okay. So now, what about, oh man, I wish I could turn my screen off. That's what I should do. I should turn the screen share off, and then I should scroll back to like a random point in a chart and be like, all right, well, which way is it going to go? You know, and then turn the screen back on, and then we'll keep track, right? I won't show you, like I'll cover up the ticker. I actually think that might be fun to do sometime. I'll just cover up the ticker. We'll cover up the future and past price action. We'll just zoom in on a certain area. And then I want you guys to tell me whether or not something's going to go up or down. And we'll track it. We'll track the statistics of it. And we'll say, okay, well, how many times did we get it right? How many times did we get it wrong? And what's the overall end result? You guys might be surprised. Okay, so we want it to go up. How high up do we think it's going to go? Like, who can give me a specific number? I like this. This is good. I love the confidence. 141.50. Okay, so you think it's going to go hit this high? Do you think it's going to go above or below that? Ooh, better answer quick. Looks like it's pushing. Heading back down. Okay. Okay, so we've got some predictions. We've got some bias. We've got some confirmation of that so far, right? So what is the difference between making that kind of prediction and executing it in real time? Like, what do you think gets in the way? Uh-oh, Snowflake, you're looking at the wrong ticker. Like, what do you think most people end up hurting themselves over? Tammy, you just nailed that, by the way. It literally hit 141.50 and then it's falling back down. Good job. Sad Boy Slim says uncertainty. Okay. So what part of the process is uncertain? Is it the end result on the chart? Is it the inability to hit the button? Is it uncertainty about whether or not that'll happen? What do you guys think the big challenge is for most traders that try to predict? Can't predict. Well, you can make a prediction. The problem with predicting is that most people need to be right, and that's always the problem. It's the failure to plan for the other three outcomes, right? So making a prediction is fine. Having a bias is fine, as long as you don't let that influence your decision making, and that's what happens though. So calling out a number or saying it's going to go up or down, that's part of it if you want to, right? The other part is adding an if-then structure to your trading, and that's really what you need to do. It's not so much, I can just randomly pick a price point and say it's going to go up from there, right? And in most cases, it probably will. And in the other half of the cases, it won't. But if I don't have a deliberate, specific set of steps that I'm going to take in all scenarios, I'm going to lose overall because the market thrives on my failure to plan. So all I need to do is make sure that those steps like prioritize minimizing my risk, and then I need to execute in real time. So you can make predictions. It's fine. That's not going to be consistently reliable, but you can make predictions and you can use any strategy on the planet, but you have to plan around uncertainty, and you have to plan around the fact that you don't have control over the market. It is a circumstance. It's not consequence. It's not something you can control or you can make a decision over. Your risk exposure is, your losses are, you control the size of those, but your end result of the chart, so we would have just got out no matter what. So this may still sell off, and that's okay. But that would have been an immediate out, no hesitation. And now we get to choose, since we would have gotten out, right? Let's erase all this other stuff. And what we'll do here is we will watch for confirmation bias, because if this sells off all the way down to here where we want it to, how many people are going to be beating themselves up over that, knowing that they, quote unquote, could have gotten in, or right, the other outcome happens and the price goes up here, at which point we don't praise ourselves for eliminating our risk exposure. So what I'll do is I'll draw a line here and I'll draw a line here. Okay. And our brain is going to weigh these two completely differently. And that's by design. And this is the danger of confirmation bias, because we don't know in the moment whether or not this is going to go up or down. We only know that after the fact. And when that conversation happens after the fact, I'm going to change that yellow. that's when we beat ourselves up pretty hard, right? So we've got two potential outcomes here in terms of just up or down, right? It can obviously go sideways to 11 o'clock. But in terms of just up and down, we've got two outcomes, okay? If this sells off hard, the immediate instinct is going to be to beat ourselves up so we can do better next time and get in on it, right? If it goes up, what is the immediate response for most people? Like if it breaks over like 142 or something from here. Chad says happiness. So do you look at your stuff after you stop out and you praise yourself and you're happy after you manage your risk? And is it the same level of intensity as the self-judgment that you put on yourself if something hits a target after you've stopped out? Or regret, I should say. There's a whole slew of emotions that come with that. We can always get back in. It's not a big deal. But in terms of just looking at these two potential outcomes, right, I'll make it a little bit smaller so it's less intimidating, right? It's going to go up or it's going to go down. Most people beat themselves up if it goes down because of opportunity cost and regret and FOMO and all that good stuff. And then almost nobody praises themselves if it goes up because they manage their risk effectively. So what happens is when something goes down here, we tend to look at it more. We want to watch it. We want to put ourselves in the scenario where it played out because that rewards our brain. It rewards our ego. It gives us more dopamine. It also kind of makes us mad. So this is an attempt by the brain to relive that scenario where we would have been profitable. And that's its own way of giving itself dopamine. If it comes up here, we tend to just not pay attention to it and we don't really care as much because we did the right thing. There's no missed reward that we can punish ourselves with. Does that make sense? So we're a lot less focused on this because of just how our brains weigh risk versus reward. Right. So if I look, let's say what was the one that I took a small trade on? I'm just going to collapse these down into one chart because we're no longer in the option trade there. What was the one that I traded earlier that I took a loss on? Was that MCTR? The small one. Was it this one? I think it was, right? Or no, that was the profit one. Let me just check my orders real fast. TRA, T-R-A-W, right? T-RAW. Do you think I would look back here as a new trader and praise myself for stopping out and taking that loss? Is that something most new traders do? Of course not. We always look at the stuff we missed that gives us money, profits. I wouldn't be praising myself for locking my profits here on this one as well. I mean, I'd praise myself for locking profits, but I wouldn't be praising myself for eliminating my risk exposure. Even though the fact, like I saved myself so much loss here by just locking those profits, those would be down 37% at this point, roughly. But is that something my brain is going to do? Am I going to look at this trade and be like, I got in, I got out, I managed my risk successfully, I walked away with a profit, and more importantly, I avoided a huge loss? No, that last part never happens in a new trader's mind. That has to be conditioned. It has to be built, right? MCTR, we're going to look at something like this and be like, man, I should have held. I would have made so much more profit. Like that's where that judgment cycle kicks in because we see the end result that we couldn't achieve, and then we punish ourselves because we want more, right? Now, if I look at this one, nobody's going to look at a loss and then look at something that fell down even harder after we stopped out and be like, man, I did a good job here, right? Our brain just doesn't allow that unless we teach it to. And that's where you have to embrace the small losses and you have to learn to accept that they occur. And then your job becomes successful execution of risk management. So, and that's what we did over on NVIDIA. Right? We just don't see the end result yet. So we don't know if we're supposed to beat ourselves up yet or praise ourselves. Because if it goes up, we want to praise ourselves since we're playing a put and we managed our risk and got out. And it's also approaching the 11 o'clock hour. So we're avoiding that theta IV transition. And if it goes down and it hits this target down here and the contract value goes way up and everyone's super stoked and we see all the profits elsewhere and all these other people are making profits, we're going to feel something a lot more intense in that outcome. Does that make sense? Fergie says, new traders view any loss as bad because they don't have a plan. Absolutely. I'll take a 1, 2, 3% loss all day, every day. I don't care. They're small and insignificant. I can make decent sized profits on the side to overpower it. I don't have to worry about it. I ain't got a good brain. I love Simple Jack. So what is the difference between this trade? Okay, let's actually pull it up here. What's the difference between these two charts right now? Aside from the up down, right? This one, I'll just explain it. This one has resolution. We stopped out, we did the right thing, we reinforced the behavior that risk management is good. Now we need to voluntarily like condition ourselves to focus on that and to praise it. Over here, we eliminated our risk exposure, which is great, but we don't have the end result. We've got delayed gratification because we don't know if it's going up or down yet, because it hasn't displaced, right? So our brain has this cycle that's open, it's a loop. Until we get that resolution, it's going to keep finding ways to give itself dopamine and to close that loop. So that's where we start looking at other tickers. We start revenge trading. We start getting into stuff. And that's exactly where we need to interrupt that circuit and say, I did the right thing. I managed my risk and I got out, right? And at that point, one of the best things you can do is just get rid of that chart. Like, just stop staring at it, because what it's going to do is it's going to get in your head, right? Because you're going to be waiting for that closure. You're going to be looking for the resolution. Is it going to go up and then do I praise myself, which traders don't do in most cases, or is it going to go down and prove me right and tell me that I suck at this and I'll never get this right because I got one wrong and blah, blah, blah. Despite the fact that you already did the successful thing and you managed your risk well, even though it wasn't a profitable trade, it was a successful trade because you executed, right? You didn't hesitate when it was time to cut that risk exposure. Just the same as you wouldn't hesitate when it was time to cut the same risk exposure if it was a profit. If it was at your target, you just cut it, right? Assuming you have a little bit of experience. And the same thing happened over here. You know, we saw, let me just make that main chart again. You know, we saw an opportunity, a low risk, high potential opportunity for a bounce, the same as we saw with the other guys. It just happened to go against us. We cut it immediately. We don't fight our feelings. We don't wait. We don't compromise. We manage our risk successfully, and we kept ourselves out of a double-digit, almost 40% loss by doing so. So this is a successful trade. It's not a profitable trade. We're going to have profitable trades. We had some already today, early on the equity side. Same exact process. We got in, low risk, high potential opportunity. We got out. We managed our risk exposure effectively. That's all that matters at the end of the day. It's not, you know, how many times you can be right. It's how many trades you can use risk management effectively on. So here, same thing. We got in, we got out. My job was done as soon as I hit that sell button. I can't just keep going to my job and hanging out and working for free and beating myself up over something that I don't control, right? So that's the mindset that I want to get everybody to, and I'm going to keep trading every day except Wednesday. So tomorrow I'm not going to be doing this. It's going to be Lee. But I want you guys to focus on NVIDIA, and specifically, you know, if you know, if you're someone who did trade that, which again, I don't want you guys to just blindly copy anything, profit or loss, doesn't matter. You know, was because we had this win over here as well, right? So it should have offset. Nobody should be feeling bad. But if you're, you know, if the end result here is that it goes up like it just did, you need to praise yourself. You need to teach yourself that, you know, this is a success. You did the right thing by cutting your risk exposure, because if I look back at that contract, I'm willing to bet it's probably not having a good time. Was it this one? It was 140, right? Right. So rather than, you know, being up here and cutting it, now you're down here. Okay. I think it was like 147 or 140. Yeah, I think it was like 147 when you decided that it was time to call it, right? Now it's down to 137. So you're down even more. What's that, like 9%, 8%? Unnecessarily, right? It's just, it keeps going down. Like, don't fight this stuff. You have to find a way to change that conversation in your head. And that's what I'm here for. I want to make sure that everybody is able to not freeze when they're in a situation like this, when you've taken an opportunity with low risk, and then you've turned that low risk into huge risk by just freezing. And we can do that through practice. We can put specific skills in place. We can develop those skills. We can reframe the conversation that's happening in our head. We can get practice. There's a million ways that we can condition ourselves. We have the ability. We have a superpower called neuroplasticity, right? Neuroplasticity typically manifests in the way that we blame ourselves when we get something wrong. Like if we go to swing a bat at a ball, if we miss 3 times in a row, we're punished. We're strike out, right? Every time we miss, we're punished. When we hit the ball, we get rewarded. So there's a very definitive, there's an operant conditioning outcome based on how we perform, right? That's outside the market. We carry that same conditioning that's happened all our lives into the market with us, and the market is designed to exploit that. So you can't do that. You have to base your measure of success on your execution, not the end result, because the end result takes care of itself over time if you focus on execution. And it's a very difficult thing to trust that process, which is why I personally just recommend paper trading until you can prove to yourself that this is something that you can consistently execute on. But it's going to take time. It's going to take practice and a little bit of effort. You're going to have to just do less to do more, right? Because less is more. I don't want anyone to take 10 trades a day. That's too much. If you're doing that, you're probably hurting yourself more often than not. What I want you to do is focus on one trade and focus on everything you experience, everything you feel, all your thoughts, all your emotions. Write them down as much as you can. Just make a little cloud of words that kind of describes how you feel looking at a chart, before entry, actually entering, during the trade, and after the trade. And just write that down. Just write it all down. Do duck stuff. He's got a trading site set up there. The objective repetition alone, that's huge because it helps recondition that library of traumatic experiences. You just got to show up. You got to put in a little work. And I know it's very easy to expect someone else to do this stuff for you, but the whole trick here is that it boils down to you as an individual. Like you have to build your trading around yourself. Like that's why copy trading doesn't work. I don't care who says, who's trying to sell you something on the internet. It does not work. It will not work unless you fully automate it, at which point you're not involved in that process. And even then there's going to be latency and things like that. And then if something happens to that person, you're dead in the water, right? Like if I get hit by a bus and you're just copying my trades, you're not going to be able to trade the next day. So I don't want that for you guys. I want you to be able to build your trading plan around yourselves, and we're here to help you. That's why we have the coaching, and we have like I teach specific in the lifetime section. So I teach those guys. And I'll put those links here in the chat as well, just so everyone has it. And then just I would upgrade access here for lifetime if you're interested. But again, there's no pressure on that stuff. It's just there, and I'm not a salesperson. I just put stuff in front of people when I believe it makes sense and can benefit them. And it has to be based on you. You can't copy my strategy and expect to win. I can literally post my strategy all over Facebook. That's why I don't have an issue teaching you guys these simple strategies, but I know they work. I demonstrate proof of concept all the time, but that's not going to help you with your own trading. You have to put in a little bit of work, and you have to develop your own confidence, and you have to be able to be the one pushing your buttons when it's time to push those buttons. And you can't do that by copying me. So I can teach you guys all the strategies in the world. None of them are going to help you until you figure out your psychology. And I've said that for years. I've repeated the same things for years, but then all of a sudden something clicks, and then it just changes trading forever for somebody. It might take me saying it 500 times, and maybe it's time number 501 that it clicks, but all 500 were worth it then, right? Sounds like a lot of work. A little bit, Snowflake. But how's your trading going there, buddy? Duck is just shilling his trading stuff. I love it. Keep going. People need psychology above all else. Like, I could teach you shapes and colors. I know all the advanced technical stuff. Obviously, you guys in the community kind of know that. I can literally break down just about any concept or any analysis. I got all the 10Ks, 10Qs, everything up the wazoo, all the market mechanisms. You can learn it all, but it's not going to help you unless your psychology is in place. Getting hit by a bus sounds appealing. Well, two schools of thought on that. Did you consider the bus's feelings? But I want you guys to look really closely at what NVIDIA is doing right now. Now, how many traders who expected this outcome are going to look at NVIDIA and be happy? I don't even use your fancy little lifetime strategies. I know you're satisfied. Use the compounding, the psychological 3% is enough. That's all I care about. If you just do something that minimizes your risk and allows you to accept smaller but disproportionately larger profits, you'll have a good time in the market in most cases. But let's look back at that contract. Just for funsy onesies, right? So what was it? 147, I think, is where I'll put the line right there. Whoever's got the recording, you guys can just rewind that. And I'm pretty sure it was around 147. It might have been a little lower, but you guys get the concept, right? We're now down to 127, 128. Unnecessary, right? But this is the kind of stuff that destroys people because they full port into options because they want to catch up, right? They use as much money as they can because they want to get the one that works. And then they want to be right after that because of the added commitment, because it's an increased, the increased desire to have the right end result, the one they expected. And then they continue to hold because that forces them to compromise because they have to be right because they can't close that loop down. And then if it doesn't work on this trade, they go to the next, and then they deposit paychecks and go to the next. It's just, and then, oh, maybe it's the strategies. So they start chasing strategies, and that's not good for you. So that's why you can have a bias, but not an expectation, right? Because once you have an expectation and it's not met, chaos, right? So that's why I like to just lock my profits at 3% or something like that, just something achievable every day. And then everything I do after that point ensures that I don't lose that profit. So I hope that makes sense. Let me catch up on the chat. You guys are chatting up a mile a minute here. One line is too many, Pookie. Yeah, I mean, somebody give me a dollar amount. Just give me a number from, I don't know, 100 to 140. Duco. Breckle. I don't know if those numbers are between 100 and 140. Let me get my calculator. It won't work, guys. We'll try 112. 112. Boom, 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 boom. All right, then you know what? We're going to go to the daily. Okay. So who can tell me what 112 minus 1% is? Or we'll do 5%, right? Oops, 112 minus 5. Let's see it. It's 560, so 106.40, right? 106.40. Bah. Okay. And then what is 112 plus 15%? That's 128.80. So let's do 128.80. Okay. So how many times do you think we could trade from 112 up to 128.80? Oh, I got to change that. 128.80. Okay. Oh, no, that's got to be green. I don't know what I'm doing myself, guys. I'm pushing the wrong buttons here. All right. So if this was our trading setup in all the history of NVIDIA, how often do you think we'd take those 5% losses, and how often do you think we'd take those 15% profits? Because I want to tell you guys, it only needs to be 3. Right? Now, this is a 1 to 3, 1%, 3% mix, but the same concept applies. It's a 1 to 3 ratio. Right? So if I only enter as price is pushing above the 112 price line, and I only stop out when it hits like 106.39, and then I take profit at 128.80 or 81, right? I've got one trade opportunity right here. It hit target. Okay, so that's plus 15%. And then I got a wick here, and then I take a loss. So that is a loss. So then I'd be up, 1 win, 1 loss. And then we got another entry here. That is a loss. Okay, so let me just mark these down for you guys. Let's say we start with $1,000, right? I'll just do the equity side too. Okay, plus well, whatever 112 plus 15% is. Wow. God, I can't do it. 117, no, 15%. All right, we got one win, one loss. I'll just do this, right? We'll do the marks. We'll do one profit and then one loss. Whoops, it'll be this one because we're entering in this pullback up and then we're exiting on the pullback down. Then we enter here and then we pull back down and take a loss. Then we enter here and we hit a target. And then this one pulls down. It doesn't push back up, but it pushes up here. So we'll mark that as a loss. And then we've got whatever this is, that's a profit. So it looks like we're about split, right? And then I just want to see if it ever comes back. Okay. So we pull up here and then we take a loss. So let me just draw that as a loss. And then we enter here on this guy. It pulls back up. That's another loss. So we stop out right there. Then we enter here and we take another loss. We stop out there and then we take another loss right here. Not looking good, right? And then we take another profit right here. And then we're done. Okay, so let's count these lines up. So we've started here. We have 1 win, 2 losses, 2 wins, 3 losses, 3 wins, 5 losses, 3 wins, 7 losses, 3 wins, 7 losses, 4 wins. Okay, not the best. Let me open up Notepad here. All right, so 7 losses, 4 wins. So our barcode is effectively, let me actually just put these in order here. So we've got WLL, WLW, right? And I'm just doing W for win, L for loss. And we've got 4 L's and a W, right? Does that make sense so far? So if we take $1,000 and we add 15%, that's our first W, right? And then we minus 5%, and then we minus 5% for the 2 losses, and we add 15% for this win right here. Then we subtract 5% for this L, then we add 15%, and then we subtract 4 5%. That's 1, 2, 3, 4. And then we add 15%. We would be up 22.14% in 11 trades. Just with the raw equity, right? And what is the win rate on there? What's 4 out of 11. 36.36% win rate. Okay. So you don't need a good win rate. This is a trash win rate. But it just goes to show you that you can literally pick a random level and use a disproportionate take profit and usually have a pretty good time. Right? Now, obviously, the $1,000 and whatever the specific starting amount for each session, that's going to change the end result a little bit because you're not going to get an even fill on all those shares. But you guys get the concept, right? It's a very simple concept. You're just taking in more profit than you are in losses. And then what happens when you bump this to maybe 3% instead of 5% loss, right? You get a different result beyond that because then maybe you're taking more frequent losses, but they're smaller. Right? So you got to just do some math and ultimately throw it all in the trash because it doesn't really matter too much at the end of the day. What matters is your ability to take action 11 times in a row when it actually matters, or 22 times because you have to enter as well. Right? So I do have to jump off of here in a little bit, but does anybody have any questions before I do that? Does this make sense? This win-loss, this barcode thing that I always talk about? Because that's what we're doing here. Right? And that's all I'm doing on this small cash account as well. It's up to 201.51 in less than 2 weeks because I traded a little bit last week and I traded a little bit this week. So I didn't get to trim it down to 100, so I'm sorry about that. But you guys get the idea, right? Now, if I look at the P&L here, all I've done is made sure that when I hit that 3% overall for the day, I stop taking big risks. And that's it. Like, that's all I have to do. I trade to trade less, and I don't try to turn this into a full-time job. Okay. Well, my lines went away. You guys get the idea with that NVIDIA stuff, right? Like, the trade was like here, And then, yeah, we're up here now. So just don't hurt yourself. That's all. That's the big takeaway here, is stop hurting yourself as much. Sorry, let me catch up on the chat. Snowflake says onions. I don't remember what the context for that would have possibly been. Are you hungry? I'm hungry. Breckles says 595 SPY. Let's look. Oh, beautiful. Yeah, so this, like actually this was a perfect example. We just didn't look at it. Yeah, this is recorded. I'll post this in the free chat, and it'll also be on all the socials. So just using this strategy, right? This is that A+ setup. All right, so we got the 15-minute opening range. We bracketed that. Okay, and then we waited for a 5-minute close on the above or below the box. So we got one above. So I drew a vertical line. And then after that, we wait for a low risk, high potential setup. So we've got this entry here, oops, above this guy. Or more importantly and better, we got a 5-candle rule right here that I like. Like that's my personal favorite, my bread and butter. So if we were to draw a long position tool, we would have this, we would have that, and we would have a 1 to 3 take profit ratio. And then anything above that is either just not my problem, or if I'm actually trading it, then that would be where I'd scale out and stuff. So in the case of SPY, it actually worked out really well for us. We just were watching other stuff because we were looking at NVIDIA and all that. Does that strategy make sense? Like I'll recap it stupidly fast and stupidly simple. 15-minute first candle, that's your range. 5-minute, wait for a candle to close above or below. And then on 1 minute, look for a low risk opportunity to retest and confirm to the upside. And then you take a disproportionate risk reward setup if it's present. If it's not, you just let it go. Does that make sense? And then you got higher lows and all that good stuff. You get your 5-candle runs and all that beautiful stuff that we talk about in Lifetime. If you're making your trading any more complicated, this alone is complicated enough for most traders. Like you really don't need anything super complex as a system. But if you're making it more complicated than that, you're probably just stressing yourself out more. And I'm curious to know if it's actually working out for you. Ow. Why? Okay. Duco says it does not make sense. Okay. Or were you answering another part of that? I'm pretty sure I asked a complex question or a compound question. It's not working out. Okay. Well, let's slow it down a little bit. What let's work on your trading plan. Is it just the outcomes, or is it the discipline and execution part, Tuco? It's your plan. Is it your plan because of the outcome, or is it your plan because it's difficult to follow? Because you don't have, well, that could be complicated. But also just understand that a plan is only really useful when you're starting so that you can document when you deviate from it and why. Like that's the big point of having a trading plan. Plan better, easy peasy. No, I don't want to. All right, let me close that. Does this all make sense? This win rate BS, this barcode stuff. It's going to close all these extra windows out. Mine was the outcomes. I had a great plan that I followed. It was the garbage I was feeding the plan, I guess. Okay, well, we can take a look at that. Duco says, I need to dial this stuff in a bit better. I mean, the cheat code here is really just take any tiny risk as the price is pushing in the direction you want it to go, and then have a disproportionate take profit, and then figure out why it's so difficult to do that. Like that's the cheat code. You spend maybe 1 day learning a strategy, or maybe 10 minutes, you know, and then you spend the next 2 years trying to figure out why you can't do it. You know, it's simple, but it's not easy. So, and that's kind of where it just helps to have someone who's been through all this stuff kind of break it down for you and be like, well, this is what I experienced when I was struggling with this, and this is how I overcame it. But, you know, this works for other people. This works for other people. And then that's really all we do here is I lay out all the parts on a table, and then I help you build a machine based on your own traits. And that's the whole point of this, is just making sure that you can become your own trader. And then long term, yeah, you can still be here and we give you better quality fuel. But the basics of trading, the foundation so that you can survive and not blow your accounts up every day, that is here. It's right in front of you. It's on these streams. So ask questions, show up, watch the recordings. I'm here all week. But speaking of which, I'm not going to be here tomorrow. It's going to be Lee trading the market open. And you guys can go from there. So hopefully this strategy at least makes sense. It's a super old one. It's pretty straightforward. It's just basic range rejection. I don't know how else to really dive into that. It's pretty clean, but you guys see proof of concept, right? And I can look at SPX and I'm pretty sure find the same exact thing. It's just a matter of which opportunity you choose to take and how much you're willing to risk versus save, right? If we look at Tesla, did we get our 5 minute? We did get our 5 minute. Beautiful. So we got our 5 minute there. We got another one here. Did we get a 1 minute? We kind of got this guy, right? That works. And that's it. Like, that's all we're really looking for. And then we're kind of heading back down for another retest. I think it's pretty straightforward. Let's look at Palantir. So we got our break to the downside, looks like. So let's go ahead and draw that line on the 5 minute. I'm going to change this line to a dark blue. Now the catch here is that we're after the 11 o'clock hour. So the contract efficiency is going to be much more drastically reduced, which means we got to be very careful if we decide to trade these. So personally, I don't like to trade these after like 11. But if we get let's say we get a super tiny red candle right here, and then, a bullish candle right here, and then a red one comes in and sweeps that down with some good volume, then yeah, I might trade that. But it would have to be like in and out. You don't want to hold those forever. You just want to get a quick, achievable profit and get out. In most cases. So with that said, I do got to jump off of here. Let me just grab these tops lists here again. And again, I want you guys to really look at the stuff that you stop out of for the better, right? I want you guys to focus on that. I want you guys to view that equally and with less judgment when it comes to your profits, your missed opportunity, right? So when something runs to the upside after you stop out, don't beat yourself up. Figure out why you're beating yourself up. And I can tell you exactly why. It's part of your brain, and I already broke it down, but that's for a more dry conversation in lifetime. But really focus on what happens when you stop out in the other direction as well, because that's where you're going to find a lot of that confidence and like, wow, I really did manage my risk well. I did a good job here. Because you're going to look at those big red numbers that aren't in your portfolio, and you're going to compare them to the ones that are in your portfolio and be like, why the hell did I do all that? Like, why did I endure all that drawdown? Why did I take these big losses when I didn't have to? And then you're going to think and be like, well, where would I be at? Where would my portfolio be if I could take all my losses and make them the same size or smaller? How much more money would I have had in that portfolio? And sometimes that's a gut punch for a lot of people, because they realize, not to say it's unnecessary, but it was avoidable. And from this day forward, you can make that same decision that you couldn't make in the past, and you can cut those losses down and make them insignificant and digestible, and still have the same size profit opportunities. So with that said, I am going to jump out of here and I'll end the recording right now. It's going to be super loud on my end, so I'm going to jump out of the Discord just in case that sound bleeds through. So thank you all. I am glad we had this talk, and I will see you guys. Oops. Push the buttons. All right. I will see you guys later. And I'm definitely looking forward to Chicago next week. So if you guys are coming with us, I will see you there. Otherwise, I'll be back in the free section on Thursday morning. So we'll see you there. Thanks.